The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 24th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is tossing at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But more important than that is this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. Now, of course, if you're inside our Tigers Den, and you should be, any and every ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we've got a sea of green out there. Not every sector inside the S&P is moving to the upside. The XLP and XAU are trading off just a bit, but all the indices are trading higher. Dow's up 254, S&P 71, 362 for the NASDAQ, 16 for the Russell, 80 points for trannies, 177 for the SOX, 303 for the NASDAQ Composite, 155 for the New York Stock Exchange. Boy, talk about getting into that overbought condition. We'll take a look at that in a few moments. Spot VIX down to $114, still trading above future contracts out there. We're still in contango. It's still above its 50-day exponential moving average. Gold is up 42 bucks. Silver's off 16 pennies. Light sweet crude is up 33 cents. Natural gas down 13 pennies. 30-year Treasury up 24 ticks. She's printing out 114.29. The 10-year note printed out is up 13 ticks, printed out 111.02. Now, our leaders in the clubhouse to the upside are Service Now, up 114 bucks or 14%. United Rentals, 48 bucks. Khaki International, up 37 bucks. Netflix up 33. HubSpot up 29. Shakers to the downside, led by O'Reilly Automotive, up 38 bucks, nearly 3%. Fiserv down 32 bucks, 15%. Molina Healthcare, 23 bucks, 7%. Willis Towers Watson down 16 bucks, 5%. IBM is off 6.5%. That's a $16 move. And Churchill Downs down 15 bucks. That's a 15% move for it as well. So we got movers and we've got shakers. Let's take a look first at that New York Stock Exchange, that advanced decline oscillator. We've got a reading right now of plus 219. All you had to do is get above plus 150, which we did yesterday. And what does that do? When we get above 150, that tells us about future prices to come. Now, even though we get a higher high today, we're still above this level. That's still talking about future prices in future. That we will see higher prices at some point in time. Doesn't have to be tomorrow. Doesn't have to be next week. Doesn't even have to be next month out there. But it says that the bull market is not done. The high is not in. At least that's how I read the New York Stock Exchange, the advanced decline oscillator. Again, we are in that overbought condition, so we want to be able to start taking a look at when there's signals for some type of short-term or some type of pullback out there. Now, Spot VIX, let's just go over and take a look at the Spot VIX here this way. You can more easily on the left-hand side see that 50-day exponential moving average line, and that's at the 2635 level. We're currently printing 2732. Now, on the right-hand side, you can see the ES Mini. The ES Mini, if that Spot VIX closes below that 50-day exponential moving average, it'll make its run, certainly for the sell zone of its daily profile, which is between 55.85 and 57.73 out there. So that's what's going on there. We still are, as you can see, we've got the spot VIX at 27.30. It still is printing above the 3-month, 6-month, and 1 year spot VIX index readings, and 2490 is the May contract, and we are trading above all forward future contracts. So we remain in contango, and as long as we remain in contango, plus with the spot VIX being above 50, it says rug pulls to the downside or what you would expect, or any kind of bad news out there, the algos would certainly start moving to the downside. Is there anything else on this set of charts that I should show you? I don't think so off the top of my head, but we can always come back. We can always come back to that. So what should we look at next? How about I share with you what I really believe is going on? Okay, and and I'd mentioned some things in the Tiger's Den a couple of days ago. I just wanted to really finish up this chart here before I went ahead and shared it with everyone. So hopefully you're watching, hopefully you're listening, hopefully you're taking a look at it. This is the Dow chart, and I've taken us back into the when World War I ended, November 11th. 1918 out there. So that's the first arrow on the very right-hand side. I made a few comments here up in the upper section. You can see key tariff acts passed in the early 1900s. These are not even close to all of them. Just the key tariffs, or at least what I thought was the key tariffs, and reading through so many of them. None of these tariffs out here prevented the bull market. So that's the first thing. If you want to go back and take a look at history, there was no tariff that prevented the bull market. A lot of people in the news media out there, that's what I hear day after day after day. I kind of say to myself, have you not spent any time going back and taking a look at history? The other conclusion I've got from here is the stock market crash. Well, that can lead to a recession. So we did have a stock market crash, so maybe we do lead to recession. But it's the bond market. That if the bond market collapses out there, then that's going to lead to a depression out there, because I hear people talking about the tariffs and somehow that's going to lead to a depression. Well, there's no proof of that, so people are just making up stories out here. So let's not make up any story. Let's just look at the facts, okay? And if we take a look at the facts, you got the UK back in August 19th of 1921. They went ahead and imposed 33% tariffs on the internationally and on the U.S. out there. And also, kind of really at the same time, that's when Britain lost its status as the financial capital of the world, as capital was flowing to the U.S. Now, capital is flowing to the U.S. not because of any of this tariff stuff, because at the end of World War I out there, you're trying to get your capital, out of where you're dealing with it. Just there was confidence in the United States versus confidence over in Europe out there. But if we take a look when the UK passed that Safeguarding of Industries Act, again, after the war, they were just simply trying to safeguard their industries, no different than the U.S. trying to protect farmers and so forth, which was what Smoot-Hawley was really all about out there. And that was actually a low in the marketplace. Then we had the U.S. They went through the Ford-Macumber Tariff Act of 1922. You can look it up. You can read all about it. It was signed into law by President Harding on September 21st, 1922, and it raised tariffs to above the levels that were set in 1913. I haven't even talked about 1913. There was no reason for me to really go back there at this stage in time, but that's what that act did, and actually allowed the president to raise or lower tariffs by 50%. Now, what transpired after that, and it's possible that that's the type of market that we're in now, is what transpired was a 2-year consolidation. This is a weekly chart, by the way, that you're taking a look at, and I've drawn in that little consolidation pattern out there. So one possibility is that, with regard to what's going on here, is we could see a consolidation pattern. We come back from this break. Let's finish looking at this chart out there, and we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're taking a look at the charts going back into the early 1900s after World War I, during the 1920s. You hear a lot of the media talking about how, you know, the tariff stuff is what created the so-called market crash out there, that we're headed into a depression. All I've done here is gone back and taken a look at the other time period, which they reference, 1920s, to see, well, what did tariffs actually do out there? So where we're at right now is we just talked about the Ford-Niebel-Cumber Tax Tariff Act of 1922 that led to a 2-year consolidation before price broke out. In 1927, we had France institute the 1927 tariff law. That's what it's actually called. That actually turned France into the most protectionist economy in Europe. You can see that the Dow continued to rally. There's a lot of people that say, oh, it was Smoot-Hawley. That is one that created the top in 1929. Do you realize that Smoot-Hawley, if you look at the history of it, you had the House actually pass a version of that bill in May of 1929. Now, as each of you know, the stock market continued to rally from May of 29 into September of 1929. Now, that's when the House passed it. What I couldn't really find is when the House or when the politicians really started talking, when Smoot actually started talking about it. Well, it was before, certainly May of 1929. So for well over a year, I'm certain. Well over a year. We know how Congress works. There's not much difference today than it was back in the past out there. Not really at light speed, unless it really has to out there. So there's no possible way, at least there's no possible way I can justify, in my mind, that that it was Smoot-Hawley that created the depression, created the recession, you know. And if you take a look at, I've even noted for you here when the actual law was passed, which was June 17th of 1930. By that point in time, if you take a look at the exact day, the market had already moved down by about 40% out there. Already moved down by 40%. Obviously, still had much further to go. I think what really led to the depression, as I put up here, is the bond market collapse. That's what equals a depression. A stock market crash, maybe just a recession out there. And that's when Austria defaulted on their debt. That started a gigantic contagion in Europe and Canada, South America, Asia. You had bank runs going on all over the place. So I believe it's the sovereign debt crisis that went ahead and caused that depression. if you will. So we've got to watch for a sovereign debt crisis. That's likely going to take place. It's going to start somewhere over in Europe or Asia, most likely. And then finally on this chart, as I've noted, is when President Roosevelt declared the national banking holiday. Yeah, because the banks were closed because of runs. That was back on March 5th, 1933, and instituted the Emergency Banking Act. Did that on March 9th, 1933. And that's where the Federal Reserve committed basically to providing unlimited amounts of currency. That certainly went ahead and created a bottom out there. So with regard to what you hear about tariffs out there, you now have some historical references with regard to how the markets responded. And the best that I can come up with out here is maybe the markets move into a consolidation pattern. But we take a look at that New York Stock Exchange, that advanced decline oscillator out there. Well, that says maybe something different. All right, so now let's go ahead and let's start getting to some of the requests that have come in. The first one coming in from Brent in Martinez, California. Let's take a look at 3D, Triple D out here, and he's looking at that weekly TD9 count bottom pattern that is likely going to go ahead and form tomorrow. It would have to have a significant rally to not form. In other words, price tomorrow needs to close below $2.12. We're at 193. Now, 212 to 193 might not sound like a lot, but percentage-wise, it probably is. So as long as you get that close tomorrow, Brent, then what you've got is a weekly TD9 count. And what Brent's asking is, so what do we see to go with that on either the daily or the monthly to assist us? So when I take a look at a daily time frame chart out here, Brent, we got nothing, nada, zip, zilch. Not a single pattern, not a wave number 7, not a anything, not a Rhodes Momentum Indicator signal, not a nothing. So how are we going to know if the daily, if that is really the case? Now, remember, a TD9 count pattern completes on the bar following bar number 9. So maybe, Brent, it's going to be next week that the 3D, Triple D out here, will generate some type of daily bottoming pattern. I don't know what it is just yet, but we don't see it right now. Now, it could form a daily bottoming pattern if, in fact, prices were to close above $2.09 for 2 consecutive sessions. That would then be what we would call a profile change in trend. And that in itself is enough to suggest that there would be a bottom. When we look at the monthly time frame out here, on a monthly basis, you can see that all that we're doing is we're trading into a prior swing point. The prior swing point is the month of September of 2024. And there were 105 million shares that traded then. Last month, we moved down with 63 million shares, so we're moving in with lighter volume. That's a beautiful thing. The low on that, I think I mentioned it, was $1.72. The low that we've seen this month is $1.71. And volume here is 42 million shares. I think it's safe to say that you're going to get at least a rejection in volume. Do you get a rejection in price? Well, as long as price closes above $1.72, the answer would be yes. Now, what Tom would teach us, he would say, wait for a sign of strength on the daily time frame out there. So that might be something to consider. But do we have a bottom on the monthly? The answer is yes. Do we have a bottom on the weekly? Most likely the answer is yes there. Do we have it on the daily? The answer is we do not. And so we either need a rally of the close above 209 for 2 consecutive sessions, or we really need that TD9 count bottom pattern on the weekly to go ahead and form next week, move actually lower, maybe get a TD9 count pattern or something like that on Triple D. So I hope that helps you out, Brent. Always good to hear from you. Thanks so much for your request. Dude writes in and would like to take a ticker symbol DBVT out here. So let's go take a look at DBVT, which is trading right now at $8.96. It has a Rhodes Momentum Indicator signal that has been triggered. That requires a bearish reversal candle to confirm a top. I see a wave number 7 signal that's going to get confirmed today, as long as it doesn't make a higher high than yesterday. And it doesn't look like that's the case out there. We just have an inside bar. Now, typically an inside bar tells us that the trend that was in place should continue. So even though you got that wave 7, we just call it a little bit suspect out there at this moment in time. If price were to close below 857, that's the daily oscillator and change line, then what that would suggest is a move back to the $7 area out there. On the weekly time frame, you're going to complete a TD9 count top at the end of this tomorrow. So you definitely have a top there. top-ish on the daily time frame, and the monthly time frame looks really good. Looks really good from the standpoint it formed a Rhodes Momentum Indicator bottom pattern. It formed a TD9 count bottom pattern. Price is trading above or trying to close above its TD9 count breakdown level at 832. If it can do that at month's end, that's going to be a very bullish signal out there. But otherwise, the weekly is saying prepare for retracement. It says prepare for retracement even back to 589. That's not the call that I would make, because I'd be taking a look at the daily one step at a time out here. So that's what I see when we take a look at DBVT. And dude, you said in the Tiger's Den, thanks for setting the record straight on tariffs. No problem. Now, before we go to a breakout here, Tom O'Brien taught us one thing. Well, many things. But one of the things he taught us, what you think about, you bring about. What you focus on grows. So if everybody believes a lie that's out there, doesn't really pay attention to the charts out there, you can get people to believe that stuff. And then you focus on it and it can grow. What I really wish that we had financial media news people that were out there at least just sharing the truth, at least sharing about what really transpired back then. Now look, granted, a much different time. Heck, we didn't even have television to the 50s. We were in 1913, 1929. I think maybe only 30 or 40% of the homes had telephones at that stage of the game. So communications were substantially different back then than they are now. But right now, we got people just believing a whole lot of BS. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Why don't we just take a few moments here and take a look at what's going on intraday, just to provide you with information of what we need to be concerned with, if anything, at this stage here with regard to the rally. So we know on the daily time frame that you start running into resistance in the sell zone between 19,327 and 19,685 out there. When we look at the 5-hour time frame chart, the candle that we're in right now doesn't complete till 2 p.m. But if price does close above the high from 2 o'clock yesterday, that high being 19,165.50, that'll trigger an A to B equals CD pattern to the upside, and that would suggest that price would make a run for its TD9 count breakdown level at 20,044 out there. The 240-minute time frame has a TD9 count top. That one hadn't completed at 2 o'clock yesterday afternoon, and then we saw that retracement. I think we even noted that yesterday when we were taking a look at the chart patterns before we went off the air. And prices still be pulled back and held support. So it closed above that high, which is also the top of its profile. Again, 19,165.50 negates that signal, sets up also an A to B equals CD pattern to the upside. In the case of the 120-minute chart, it already negated a TD9 count top. A Rhodes Momentum Indicator signal has been triggered, but that needs a bearish reversal candle to confirm a top. If you take a look at the 60-minute time frame chart, it has a TD9 count top that I believe is just negated. Yep, it was negated as well. So that's got no topping signal. The 30-minute time frame chart has a TD9 count top that was negated. The same thing on the 15-minute time frame chart. So we're seeing a lot of short-term tops that are getting negated out there. One that is not been negated just yet, I believe, is the 10-minute chart. So the 10-minute still has a TD9 count and a Rhodes Momentum Indicator top. So that's the one that's got a topping signal right now, very short term. What you'd be watching for would be support levels here. And that would be either 19,079 or 19,013. That's the bottom of that 10-minute profile at this moment in time. If price were to close below 19,013, then we'd be looking at 18,834 as the price target. But the larger term time frames are saying, not so fast out there. Let's see if the ES Mini is suggesting the same. So let's pull up the ES Mini charts out here. Give me a moment. We'll see what they're suggesting to you and I. Come on. ES, what the heck did I possibly do? But that didn't come out. Clearly something. Okay, so now we got the ES Mini, which also, just like the NQ, is rallying towards a sell zone. For it starts at 55.85 and lasts all the way through the 57.73 area out there. So we got that. Now we need the other charts here to go ahead and populate. That should take just a few moments out there. Let's hope just a few moments. I do see that I just really need that. I really need these tools to populate for us. So let's just wait for that to take place. Hey, how about the hockey games last night? Another great round of hockey last evening out there. Okay, so now on the so we got different signals here on the ES Mini. Who's leading the charge? Is it the S&P or is it the NQ? Or is it semis out there? Well, let's take a look at the ES Mini. The ES Mini has got a TD9 count top. That TD9 count top is at 54.9975. If price were to close above that, it'll go ahead and trigger a pretty large A to B equals CD pattern to the upside, because it looks to me like on that 240-minute time frame chart that TD9 count top getting back to the bottom of its profile was probably just a 0.382 retracement. So be careful. Watch that TD9 count top. Watch 54.9975 out there. The 120-minute chart, just like on the NQ, negated its TD9 count top, so that suggests it wants to move higher. It formed an actual TD9 count bottom pattern this morning. So did the 60-minute time frame chart. The 60-minute time frame chart just simply needs a close above, I think it might be a different level, 54.9675. You close above that, it negates its TD9 count top and says it wants to move higher. The 15-minute already negated its TD9 count top. The 30-minute does not have a topping signal out there. And the TD9 count top on the 10-minute has found support at the center of its profile at 54.62. That's pretty bullish. If that's all that it does, it's really found support at that green oscillator and change line. So that's what's going on an intraday basis out here. Let's get back to, we just have just a few requests. So let's get to those. And then we can continue surfing around, looking at intraday charts for different instruments out here. But the next request that came in is UNP. And this is for GTE. So if you give me a moment here, and I'm just curious, it just doesn't ring a bell. Union Pacific. So we take a look at Union Pacific. What it's doing is, so today it gaps down, and it gaps down below its red oscillator and change line. So we got a falling price oscillator below zero for the daily time frame. Bearish, a bearish set of conditions. Price is trading into a swing point. It was a wave number 7 bottom. That formed back here on April the 8th. That swing point hasn't gotten down to low. That swing point has got 5 million shares. So far in 2 hours of trading, this has done 1.7 million shares. So we're at about, 4.5, close to 5 million share day out there. But price, so, if it does right around 5 million shares by day's end, it's really suggesting, GT, that price should go at least test the low at 204.66. On a weekly time frame, we've got another day and a half, basically. The weekly swing point had 23 million shares. So far for the week, we've done 12 million shares. So weekly is coming in much lighter. Now, I don't have any kind of bottom pattern on the weekly time frame, just a swing point that it's testing. And let's populate this monthly chart out here, see what kind of signal information we've got, other than the fact that price is trying to get back inside its monthly profile. Oops. And it would accomplish that task at a close at month's end below 214.11. Now, this is a slightly bearish structured profile, and the low that was put in for the month basically came down to just about the level where a counter trend rally would end. It's really a range, and the range is really the top of that profile. I gave that number to you, but let me give it to you again, 214.11, the center at 202.70. And if you can get it close above 214.11 at month's end, then you'd have to say that was nothing more than a counter trend move to the downside. Now, I don't have the corresponding bottom patterns, at least just yet, on the weekly time frame. We do have one on the daily, but that could get negated if we in fact test those lows. So GT, that's what I see when I take a look at UNP. You also wanted to take a look at the IYT. That is the ETF for transports out here. And we take a look at this, obviously, let's just take a look at the daily time frame. And what do we have here? It looks to me like we've got at least an A to B equals CD pattern to the downside that completed. Let's draw in the A to B line. Let's just simply move that over to that C point out here. That's next highest high. After that B, A to B leg, and that would be right there. It's actually labeled number B. So you can see we made a probably a 1 to 1.272 by the D point bottom pattern, Gartley buy pattern with that bullish engulfing candle. Now, what do we have going on today? Today we have price that is, did it test it? Maybe I missed it. 58.82. What's today's low? 58.79. So today is actually testing the swing point from the trading session of April the 7th, an important swing point. 391,000 shares traded hands that day. Where are we at today? 142,000. If you can do this with less than 391,000 shares at day's end, you'll have a test rejection of that swing point. What's that mean? You can't bust them the downside, you try to bust them the upside. The problem is the first upside level is 60.71, the second is 62.94, and the third is 65.17. We come back from this break, we'll finish looking at the IYT for GTE, and then we'll take a look at Coinbase and Mara for Pete G in the Tiger's Den. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back. We'll look at the charts here for the IYT. We've already covered the daily time frame, which has got the buy the D point pattern. We know that resistance is the bottom of its profile at 60.71. In fact, it was tested and rejected yesterday. That's going to take another run for that level. If you can close above that, then it's likely to move up towards 62.94 or 65.17, the center, and then top of its daily profile. The weekly time frame chart has a TD9 count bottom pattern. It completed that pattern, or it actually completes that pattern this week. Now, what price has already done this week is it's already rallied up to its oscillator and change line, or close to it. And that's at about the 62.36 level, which happens to be the bottom of its weekly profile. Now, when a new profile forms below price, that is a bearish message. It says it's a message of overhead supply. It doesn't mean that price can't get back in there. In fact, if IYT was just going to generate a counter trend move where it would find resistance would be between 62.36 and 65.69. The monthly time frame chart basically looks horrible out there. So I don't have anything to really share with you on the monthly time frame chart. It's just really the daily and the weekly. So I hope that helps you out, GTE. Let's go take a look at peaks requests out here. The first one is to take a look at Coinbase. COIN is the ticker symbol out here. And Coinbase today looks beautiful. What do you mean it looks beautiful? Well, first we start off with a TD9 count bottom. That's back on April 7th. We get a confirmation of a Rhodes momentum indicator bottom on April 9th. Today, we are trading above its TD9 count breakdown resistance level of 195.33. That is a change in trend signal for Coinbase. So that's what you're getting right now in the daily time frame. It's only 11:44. It needs to close above 195.33 today and tomorrow. And if it does that, Pete, this thing should continue to rally. Now, rally to where? Well, and if we take a look at the weekly time frame chart, which formed a TD9 count bottom pattern, which also formed a buy the D point bottom pattern, it's likely going to rally towards the top of its profile, which is going to be also where the oscillator and change line is at. So 210.94 is likely the next level that price runs to. Now, if price can close above that, well, then you'd have a weekly change in trend signal, profile change in trend, and you'd be trading above the oscillator and change line. And that would say that longer term, over the weekly time frame, you'd be looking at a run to 302.40. And on a monthly time frame chart probably had a sell the D point top. I can make one. I can put one in there, but I'm not going to even do that. Why? Don't have to. What we know is that what Coinbase did was it rallied into its TD9 count breakdown resistance level a couple of months ago, several months ago, 4 or 5 months ago. In fact, it was 2 months. It was the month of November and then December of 2024. So 323, that can be when you get to a breakdown level or you get to a breakout area. Red lines are the breakouts. Green lines are the breakdown areas. When you get to that in fact can be a top. And that's what is proved to us in the monthly time frame. So price can't bust them up. It tries to bust them down. We have found support at the bottom of its monthly profile for the last 2 months, 166.48. So you got a nice bottom on the daily. That's got follow through. It says you're headed to 210.94 next. And the monthly time frame's got a bottom just as the weekly. So that's what I see with Coinbase out there. So if you're in that trade, just stay with it. You also wanted to take ticker symbol MARA. So let's see if I got that back up on my screen out there. No, I did not. But I found an error. I found a mistake, MAYA, on my system, and I need to correct that sometime today. But let me get this MARA. Why isn't it? Come on, take it. Mara. This is also for Peak G inside the Tiger's Den. So this is going to take about 10 seconds or so to go ahead and populate. I think we looked at this recently because I see I've got drawn in there an A to B equals CD pattern to the upside. So that's what's in place right now for the daily time frame. And that gives us an initial price projection somewhere around 1570. Please don't quote me because I'm not using the exact A to B equals CD tool out here. Just an estimation. But before price can get up to that level, we've got to contend with the top of its weekly profile. And the top of the weekly profile is 1495. So Mara's headed to 1495. It needs a close above 1495. Well, it can still get to the 1-to-1 A to B equals CD, and by week's end close back below 1495. But a close above 1495 on the weekly time frame, which it already has a confirmed TD9 count bottom, you'd have a breakout message for Mara on the daily and on the weekly. And much like the monthly time frame chart that we took a look at for Coinbase, here what we had is price found resistance at the top of its profile at 3140 out there. And now did this months ago, back in February 2024. Couldn't bust them up. Tries to bust them down. Gets back to the bottom of its bullish structured monthly profile. That buy zone is between 985 and 1255. So you got bottom on the daily. You got bottom on the weekly. You got bottom on the monthly time frame chart out here. Now you're just going to contend with resistance levels. And again, that next resistance level being 1495 for ticker symbol MARA. Now this wasn't a question, but since I really don't have much in the way of additional questions out here, I think it's worth taking a look at. And what I want to do here is I want to switch back to my other chart because it's got kind of the cadence of the market, if you will, consecutive days higher and lower. And that is to take a look at the XLF. And the question is the XLF, oops, not the Y. Oh, Stevie. Why did I do that? Life is happening for us, folks. We're going to see what the XLY's got to say. But what I really want to do is put up the XLF. And that's what we're going to do. Even though it's got the XLY, by the way, it's got a daily Rhodes Momentum Indicator bottom. Price is taking on the area where a counter trend rally would end, which is between 193.27 and 196.20. A weekly TD9 count bottom pattern. And the monthly, not really sure. Just monthly holding profile support. But we see this across the board, right? It's in line with the idea of maybe worst case is we just have a consolidation. Now, the consolidation can last for a few years. And taking a look at the chart, the real true chart of historical information about tariffs. And trust me, I did not put all those tariffs in there. If I did, I wouldn't have had much room to be able to take a look at charts. It would have filled up our white space out there. But anyway, now let's take a look at the XLF. Going to let these charts here populate. And then we will take a look at LTBR. So thank you for putting that request in there, Dan. Much appreciated. So let me just kind of put this, make sure I remember to do that. So we'll take a look at the XLF on a daily time frame. What do we have out here? You've got a buy the D point bottom pattern that had formed. And you've got a profile change in trend that is taking place today. Profile change in trend, that's where you close above the top of the profile for 2 consecutive sessions. And that's what it's likely going to do today. I would say there's also an A to B equals CD pattern to take a look at. The B point of the A to B equals CD on the daily time frame is the day of April 15th. The volume there was 41 million shares. Today, so far, you're at 10 million shares, 2 hours of trading. So it looks like a little bit lighter volume. Nonetheless, if we take a look at the, if price closes above 47.90, it's going to trigger an A to B equals CD pattern to the upside. Now, it would also suggest that price would run towards 50.33. At 50.33 is the TD9 count breakdown resistance level. On the weekly time frame, what I see out here is a Gartley buy pattern that formed 2 weeks ago with that bullish piercing candle. Now what price is going to do, it should rally up towards its oscillator and change line, 49.53. Now if price can get above that oscillator and change line, the level where a counter trend rally would come to an end on a weekly time frame chart would be between the prices of 50.17 and 50.69. And finally, on that monthly time frame chart, even if we said it completed A to B equals CD, which it was close but no cigar out there, price just simply pulled back, found support at the bottom of its monthly profile. Stevie doesn't see the XLF as rolling over. I see the XLF as trading higher. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at the LTBR. That is Lightbridge Corp out here. It's trying to form an A to B equals CD pattern to the upside for its daily time frame today. It's taking on its swing point from a trading session of April 14th. Volume there, 1 million shares. If price closes above that high, which is 844, we're trading 867 right now. With more than 1 million shares, you've done 355. Multiply that times 3, you're going to be at about that volume level that you need. So it looks like you're going to get a confirmed A to B equals CD pattern to the upside. It's just a small one, or that didn't work. It's just kind of a small one out here. That price up projection somewhere around, give me a moment here, somewhere around the $9-ish level out there. I would say 921. I'd say 921 because when we look at the weekly time frame chart, price pulled back, found support at the bottom of its profile. It's trading higher. We're trading above last week's high. That's a bullish signal. So 921 is its weekly oscillator and change line. If price can close above that, then you've got your next battle between 1096 and 1333. The monthly time frame, which formed a TD9 count top, found support at that green oscillator and change line. That changed colors from red to green. That's really bullish signal out there. I know it's got that top out there, but getting back there and finding support, that 601-ish level was definitely a buy point out there. So, Dan, I hope that helps you out. Yvonne wants to take a look at HOOD out here, so let's take a look at it, see what this is doing. This is trying to form an A to B equals CD pattern to the upside as well. It's taking out its B point, which was a trading session for April 15th. Volume there, 30 million shares. So far today, you are up with 23 million shares. Yvonne, you've got an A to B equals CD to the upside. Now, what price is going to deal with, I'm not going to draw that in. You can do that on your chart out here because we're about to close out the show. What price is dealing with right now on the weekly basis is the oscillator and change line. So you need to see a close above 48.34-ish for that daily A to B equals CD pattern to fulfill itself. If it does that, then you are in great shape out there. And I know you wanted me to look at NIO. I will have to save that for tomorrow morning. So tune back in tomorrow morning, and I'll make sure that we look at NIO, and that is for Yvonne. Folks, stay tuned for for all great programming today, and thanks much for joining me. And just simply have a terrific Thursday. Be safe out there. Take care, folks.